Welcome back. It's Group A distribution day. Just a quick overview. I won't go over the weeklies because I don't have content, but they release their weekly distributions as well as the underlying ETFs that pay on a monthly basis. Here is Group A that I have listed right here. I have this broken out by the different groups. If you like to filter, for example, add in Group B, it will jump in, take it out, it'll go out. But overall, I just break these down, sorting based on the best percent return for the month. For the recent dividend that was just announced divided by the share price. For those who are interested in that metric, I guess that's how I track them. But we see Snowflake actually came in the best. $1.13 dividend on a 1639 ETF price gives you about 6.88%. TSLY was 5.04%. A standout getting the double boost today was Gooey. It paid out almost 5%, but also got that boost from the Google antitrust case being settled. So Google itself, the underlying, is getting a boost, which is shooting Gooey up. I think the last I checked is up somewhere around 6%, but then it's also paying out that pretty nice distribution for Gooey, to be completely honest. I'll take a look at that one momentarily to see how the distributions have trended over the last few months and see that the 69 cents is actually pretty good. And also point out the recent price up to $14.29. Gooey was stuck in the 12 range for a while. So that one's getting a little boost both from the ETF price and a pretty decent distribution for this month. RBLY paying out, I think it's the first dividend or distribution, $2.07. 3.82%. That said, the ETF price is actually up from when it initiated, so that's been a pretty good investment thus far. OARK coming in at 3.53%. YBIT 2.78%. TSMY, XOMO BRKC all in the 2 to 2.5% range. TSMY and YBIT a bit low, but BRKC or Berkshire and XOMO, that's about standard. These are not very volatile underlying equities, so therefore I would expect their distributions not to be as high as some of the other ones. But jumping into Group A, first I just want to note, looking at Gooey here quick. So from a compare perspective, getting the boost right away from the underlying equity going up today. But from distribution per share, you can see like 69 cents. And I think that's the highest one they've had since inception. So I knew that looked high to me. Gooey's always been kind of in that 30 to 40 cent range. So coming in at 69 cents, that was definitely a large increase or beyond what was expected, I would think, with the average being just over 40 cents. That's quite well. From a price plus cumulative distribution, you can see that step jump there. I don't know if I need to zoom in or maybe not. But their cumulative dividend went from 981 to 1051. Pretty decent step for Gooey. And additionally, the ETF price went from last month 1317 to 1429. And you can see it was in that 12 range forever. So that one's getting some outperformance lately. Gooey is not the most widely held ETF, but just figured I'd see that and point it out. As far as for Group A, for Snowflake, OARK, TSMY, and TSLY, I do got that kind of in-depth component. So if we take a look at Snowflake quick, just to hit on their distribution and see how that's trending, that was the highest from a percentage basis at $1.12, almost $1.13, significantly higher than the last 2 months. Actually, more than the last 2 months combined is greater than. So good payout for SNOY. From a price plus cumulative distribution, you can see it started at 20. Doing up to about past 30. I guess somebody who invested this is up probably 50% or so from a total return perspective. And that said, Snowflake was the best option from a compare perspective, but the YieldMax reinvested dividend approach is basically keeping track of it and just some slight underperformance. Of course, the non-reinvested dividend approach always trailing slightly, which is expected. But jumping into the details of SNOY, for I guess those who are interested, I'll look to cover the details for SNOY as well as OARK, TSMY, and TSLY. But to start off with SNOY, I guess we got a 230.09 price right now. So the current stock price is approximately where the dotted line is. Their synthetic is at 200. So we do got the positive value for the synthetic. Where they have their call options written, they have them at 247.50 and 250. So quite a bit up. So SNOY can definitely go on a run higher without any capped upside. And then we do got the credit call spread, or the call that's bought as part of the credit spread, is at 257.50. For those keeping track, these will expire at the end of the week on September 5th. From a fund makeup perspective per share, as I know, the synthetic value's got about 74 cents per share in value. Contracts that are sold right now are a 7-cent drag on the fund. So the current ETF price is more than their cash holdings, coming in at 17.07. It looks like it is down a little bit right now. That's at 16.48. From a synthetic usage perspective, they have 3,928 contracts they can write calls against. They've written against all those. For 2,600, they've used the credit spread method, or selling a credit spread instead of just a naked call options, so that's about 66% insurance. And maybe just looking at the fund overall, SNOY's been a pretty good performing one. Shares outstanding have actually gone down. The market cap shot up there. Good performance. That must be share price going up. And then I guess just looking at it over time to 9.3 here, yeah, I guess you can see that boost there. So yeah, Snowflake did go on a upward. I'm trying to remember what the underlying stock did. I believe Snowflake went on a upward path recently. And it looks like, so in the last, just taking a look at the price performance for the last month or so for Snowflake. Oh yeah, they went from about 200 up to about 240 and came down a little bit. So it looks like that boosted the synthetic. Yeah, it boosted the synthetic, and it looks like they cashed out the synthetic a little bit to boost their cash positioning. And recently the stock's gone down a little bit from 240 to about 230. But yeah, I guess that's the price action of the different components. Jumping into OARK details. Once again, not a hugely owned fund. That said, for people who do own it, stock's going to trade about 75, ARKK that is, OARK at 870. Positioning, got calls sold at 76 and 76.50, so pretty close to where the call or the price is right now. But then the credit spreads start bought at 78 and going up to 79. From a positioning perspective, the synthetic does got some positive value. I just want to take a look to make sure these line up. 51 cents, 51 cents. So we are good there. These charts line up, just was checking that. From an ETF perspective, the ETF's worth more than the cash, driven a lot by the synthetic. That said, we got a 4-cent drag from the weekly calls that were sold. From a synthetic usage perspective, they have written calls against everything they can, and they got 100% insurance in case there's a big run, which is guaranteed via the credit, some of the credit spreads instead of the naked call options. I'll jump into TSLY next. That's a decently held fund in terms of size and number of people that own it, in terms of at least the share count. As you can see, they're outstanding shares here. I guess I've actually gone down recently, but it started off as a very widely held fund. Tesla, the underlying stock's at 341 right now. It is up. This line must have been before today's gain. Tesla, the underlying equity or the ETF's also up to 8. So that is at 341. They have sold some calls sold at 340, so we're getting slightly capped on the upside there. That's how we got more at 342.50 all the way up to 355 that are sold. Then we got calls bought at 360 up through 370.250. So Tesla, the underlying equity is starting to hit some capped upside with the calls that were sold. Taking a look at the fund's makeup per share, definitely got some value in that synthetic. It's actually 91 cents per share. Yeah, 91. It was a bit higher, but 91 cents per share. It's pretty good for an $8 ETF. Then from a usage perspective, they still got some remaining capacity that they could potentially sell 3,825 contracts. Perhaps they'll do that today. I guess we'll see, but they are employing the credit spreads on basically everything they have sold at the moment. So yeah, here's how the fund is doing. ETF price back to 8. It was a bit lower. Today's gain is back to 8. Cash position has been steady, so everything's been driven. At cash position, we're at 686. We were 680 earlier in the month or middle of the month. So that hasn't moved that much. That said, the synthetic has been on an upward trajectory. That said, it's gone down recently. I just want to take a look at the Tesla underlying equity stock and looking at it for the last, let's see, Tesla. That's basically tracking the equity, the underlying equity. That said, it is up today. So this line, it was going down. Now it's back up to 341. So the underlying equity or the synthetic is tracking the underlying equity a bit higher. That said, it could get capped down a little bit. As I showed up here, we're starting to hit those calls that we sold at the end of the week, or that expire at the end of the week. That said, the week is somewhat shortened due to Labor Day. So we only have today and then let's see, Thursday, Friday before those will expire worthless. And then finally, jumping into TSMY from a positioning perspective. TSMY, everything is at the 230 strike for their synthetic. That shows it there. You also got the little button up here where you can see it. The stock's at about just over 230. So the stack and the synthetic are almost right on top of each other. So I imagine if we go to the fund makeup per share here shortly, the synthetic's value will be right around 0. That's it. Where do they got calls sold? They got them sold at 232.50, 235, and 237.50. Then a bunch bought at 240, and then finally 247.50. Fund makeup per share, yeah, as I said, synthetic value basically nothing. Other contracts sold -3 cents right now in the fund. So ETF price basically matches their cash value right now. If the underlying equity can move higher, of course, that synthetic can gain some value. From synthetic usage, they currently have all the calls sold that they can, but they also have credit spreads and everything. So there is some insurance to the upside in case TSM goes on a large run higher. As far as the fund, I think it's just been slowly going a little bit higher. Shares outstanding have been increasing. Market caps been increasing as well. From let's see, the calls they have sold right now, in case you're like, so the main one I show the positioning that shows like how many contracts they have sold. This shows the actual value of the contracts they have sold. So you can have lots of calls sold, but if they're way out on the strike price, it could be a lot of calls that are sold, but they're worth basically nothing if there's a low probability that the price will actually hit that strike price. Whereas you could have a few contracts sold, if they're closer than the current stock price, the odds of the strike price of the call being hit are higher, so the value is more. So this basically is the same plot as position, just it takes into current market value. And I got market value as far as the fund in total, and then on a per share basis or a percent per share. So the percent that it is on take basically the market value per share divided by the ETF price, get a percent. But we can see that at the 222.50, the market value is 0.27 cents per share, whereas the market value at the 235 on a per share basis is 3.7 cents per share. So you can see that's where most of the value is. And then they got all those calls that are bought. You can see they have as many bought as they have sold, but the ones that are sold are worth more than the ones that are bought, just because the ones that are bought are clearly further out in strike price, so they're less likely to hit, theoretically. But like the one they have the most of is only valued at less than a penny a share. So that upside, basically what you're paying for, probably these two combined is about a penny a share. And then all these combined probably adds up to 4 or 5 cents per share. If you're interested in where the market value is for the calls that are sold, this is definitely the tab to look at rather than the positioning, which just basically shows how many at each strike price. Then as far as how the fund is doing over time, don't have a lot of data.